Good morning, everyone. It is Friday, which of course we all love Fridays, but of course we love Fridays when we have green markets. Today's topics, we're going to talk about Amazon earnings, unfortunately missed a little bit, or actually forecast down a little bit, which they're down. And then we're going to talk about a future IPO that's going to come someday and how it ranks, and that's going to be OpenAI. And then Corey's going to talk about the myth of, what is it? Go big, go home. I can't remember it, but it's like aggressive is going to lead to the biggest returns. He's going to talk about that and dive into
taking risks, taking
taking
big
risks. Taking risks. If I'm going to be a cliff diver, I better just start on the biggest cliff, right?
Do you have to risk it to get the biscuit, Mike?
You have to risk it to get to that. I've never heard that one. I never
You've
heard
never
that
heard
one.
that one?
When I played football, they said, do your job. Don't be taking crazy risks. But oh
Oh,
well,
stay in your lane. I like that. I like that.
stay in your lane. All
Yeah.
right. This is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So I will start off with Amazon earnings came out, and they hit on revenue and earnings, but they pointed down. So this is always that, hey, my report card was good, but I'm saying next semester I'm not going to do as good. And this is not the only company that said that for 2025. I've seen a few others, and the result is consistent. If you hit earnings and revenue, but you say it's going to be not so good going forward, you go down. So Amazon went down 3.6%, 3.7%. Not a lot. That doesn't sound like that much, but when you're talking a trillion, company worth trillions of dollars, 3 and 4% is the value of entire companies. So Amazon is one of our core holdings and will continue to be. I don't know who does it better than Amazon for online. Earnings per share, I mean, $1.86 versus $1.49 expected. That means they smoked earnings. That's really good. Revenue was just a tiny bit, 0.49 billion. That's a lot of money. What was that, 490 million, something like that. And then they break it down into web services and advertising. But the reason why it's down is they just said that 2025 is going to be tougher, basically. And of course, we've seen this with other companies in the past. Meta comes to mind last year, and they say, whoa, it's going to be so hard. And some of it is setting our expectations. So, Amazon says we expect revenue to grow 5 to 9%, and that's the low end of the range and things like that. So, not going to spend much time there. So, this is the sixth of the Mag 7 that you're very familiar with. 5 of them were last week, Amazon today, and then of course the one you're waiting on, that I'm waiting on, that Jensen Huang's waiting on, is NVIDIA. So NVIDIA is coming out, and Jensen Huang's their CEO, by the way. NVIDIA is coming out February 26th, so we got a couple weeks, and we'll see. NVIDIA is not selling at their high, just they came down because of the deep seek. I keep wanting to call it deep sink, but it's deep seek. But we'll see what
I still
NVIDIA
think deep fake
deep
and
fake.
because did you see those deep fakes going around the internet of people speaking or famous people doing whatever?
I
Have you
know.
seen
I
those?
think I have seen them. I think they have one that's Trump with me, and they faked me being with Trump. I don't know why they would do that. I don't
Oh,
know.
that's funny. Yeah, but I still think of deep fake because it kind of trained on the American models, so and it thought it was an American model. So
Sometimes I wonder, and I do not know that this occurred, but I wonder if, in China they took out some options on NVIDIA to drop, and then they released this kind of stuff, and they're like, yay, we just cleaned up on our options. I don't know that occurs, but it certainly could. So, and how would we know?
I think the white, if you want to go conspiracy route, the white paper was released within an hour of TikTok being banned. So
Oh my gosh, wow. It
they thought it
ties
was kind of a shot across, you know.
it's tied to TikTok. I cannot believe that
I don't know.
TikTok would cause Nvidia's stock to go down. That's a sad occurrence if that's true. Okay, so other interesting news. You've heard of this thing, ChatGPT, right? Everyone, that's the first the first of the AI things that really started to change things. November of 2 years ago. Um, so SoftBank has funded another or a $40 billion investment. And by doing that, they take ownership of a piece of open AI when it goes to market. And eventually this thing will IPO. But by putting in 40 billion based on whatever they got, must have been 1/7 of the company. That makes the company worth $260 billion. That's a huge company to start. 260 billion. Microsoft had invested in this in the past, and I assume they still hold their investment. So when this thing goes public someday, SoftBank will reap the rewards, Microsoft will reap the rewards, and then we'll play the IPO game where who knows what it'll do and where they'll put it at and how it'll act after that. A lot of times when things IPO, they go down the next year. I think I showed that chart last week. But what I pulled up is the 11 biggest IPOs of all time because I thought this would be interesting to look at. I don't, so the biggest one ever was Saudi Aramco, 26 billion, Alibaba, 22 billion, and that must have been they raised the money. SoftBank, we're just talking about them, 21 billion. And then you see Visa, and then really interesting, I see Facebook. So if you remember the Facebook IPO, they tried to do something tricky where like everybody could get 5 shares at the price. And then what happened is, if you remember, I think it IPO'd at 36 and went all the way down to 20. So, hey, congrats, you got 5 shares, and they lost almost 50% of their value. And I know that this was one of the companies that Steve bought early on, where I was a little nervous when he bought it back then when I wasn't working for this company. And I was like, Facebook, I don't know, is this a good investment? I'll trust Steve. And boy, it has been a fantastic investment. They've renamed themselves Meta, made a lot of money off of Facebook. Hey, we actually made money in our pockets rather than them just making money off our eyeballs. So anyways, these are IPOs. Very risky, but we'll let Corey talk about the risk. Go ahead, Corey, take it over.
Yeah, do we need to take those big risks if we want to be successful? All right, so that's something you might hear. Somebody tells you a hot stock, and you've got to take this risk. Actually, I'm talking to a cashier yesterday, and he told me that this is his words, Mike. He said, "I think AI is about to take off. I'm loading the boat on Palantir," is what he told me.
Wow. Wow. So he's just catching that now. Well, that's good. I'm glad
Well,
I'm
no,
glad our show's getting around.
he told me he thinks it's about to take off. Um, so he's taking a big risk. And does he have to do that? So here we go. Should we put all of our eggs in one basket? Or should we contribute over time, and a smoother investing journey? So here we have a chart. This is an example of someone in the year 2000 investing $1,000. Pretty, keep in mind that this wouldn't have been a great time to start. That first decade would have been pretty rough with given this time frame. But of course, this investor had less money invested there. So timing does matter a little. Just be mindful of that. But there's a 25 years, 60/40 portfolio, $1,000 January 2000, and then $250 a month from there up until now. This investor would have invested $110,000 over the 25 years, and they would have $312,000. I would consider this a success,
Very
um,
much.
personally, and everyone's got different criteria for that word. That's their own word. But for me, I view this as a successful experience for this investor. This investor is very extended above their initial investment. So at that point, from a mental standpoint, you have a little more position of power where a 10% drawdown doesn't scare you as much, or volatility doesn't scare you as much, because you've built that cushion over 25 years, to feel confident in. So do you have to take a big risk? No. And one more thing about big risks. One more thing about big risks is you might have stayed the course for 25 years, and then you take a big risk. And they show an example of Citigroup here.
Mm.
Citigroup hit a high of $178 a share in about 2007, 2008. And it's still 80% off of its all-time high. So let's say, you take the wrong big risk at the wrong time. You could set yourself back, way behind, where you could have been just staying the course, slow and steady. So anyway, Mike, what do you think?
Yeah, I have a lot of conversations about big risks. I deal with some clients that are like, "Hey, I'm a risk taker. I want to invest aggressively. Can we just put it in one stock?" And I say, "Absolutely not." And they'll say, "Why? Don't you have a stock?" "Well, I have stocks I like." But if you put all your money in one stock, you could be wrong, or you could be right 9 times, and then the first time you're wrong, you lose everything. So, in fact, I had a friend of mine that said, "Hey, I put all my money in 2 stocks a couple years ago. One doubled and one went to zero." And I had to think about it for a second. I said, "So basically, you're at break even from a couple years ago." They said, "Yes." And I said, "That's probably the best case thing for you." And they said, "Why is that?" I said, "Well, here's the thing. If they both went to zero, you'd never put in the market again. You'd be like, I'm never touching this. If they both had doubled, you would think you are the smartest person on earth, and you would continue to be so aggressive. Um, Eventually you would lose." And I said, "But the way it worked out, you're talking to me, we're going to put you in a diversified portfolio, and you're going to win overall." And I know that investor has actually done very well, but it was a lesson to me, because and he even told me the names. I mean, he was like, "Hey, this one doubled and this one went to zero." And I was kind of like, to have half my investment go to zero would take a pretty strong stomach, but that's high risk. So, what we try to do with our risk ranges with our portfolios is still be diversified in high risk investments. If the market goes down, they're going to go down. They'll go down faster than even the market. But when it goes up, they, multiply times the market. So, yeah, that's what we do, but we're not taking chances on companies going bankrupt or, going out. It's still amazing to me when you show Citibank, because I remember, back in 2007, Citibank, I think, was in that with AIG, the too big to fail, grouping. And it seems like a lot of companies have come back since then, but I guess Citibank hasn't. So,
Hey, Mike, super quick little story on AIG. So I was a new investor at the time, and I'd been working at Walmart, saved up my $3,000. Back then, you had to have $2,500 to open an account at Fidelity. So I did my work on my 18th birthday, opened it up. AIG had crashed, however much, 80, 90%. I mean, it was bad. And the government announced a backing of AIG. They announced they're too big to fail. We gotta bail them out. It was a bailout. So on the morning of the bailout, I thought, well, they can't go bankrupt now. They got bailed out, so I'm gonna buy the stock. So then, it was okay. And then like two days later, they did a reverse split. So the
Ah.
share price, and it was like a 50 for one. I mean, it was crazy. Um, but I I thought I was rich. I thought I was rich because the share price went up, from like $1 to $50 or something. Um, and I was new in the market. It was really funny. It was like one of my first three stocks. So
Oh
pretty
yeah.
funny.
That is, and sometimes when they do those split, usually it splits the other way, then not a reverse split. It's usually a normal split.
Right,
But
right.
it's you like, people will call like, oh my goodness, my Nvidia stock just went down by 90%. And sometimes the mathematics on the site doesn't show right away. And
Yeah,
no, you have 10 times as many shares worth 1/10 as much. It's really a net zero, but that's funny.
it was funny. Funny.
Well, everybody have a great weekend. Next week, we're talking about risk. We're going to be talking about our ego stocks, exponential growth opportunities. And these are aggressive stocks in our aggressive portfolios. But we're going to start to break some of those down. We picked 10 of them. We just rolled them in and out, from last year's, and one of those was Palantir. So yay, I like that one. Not all of them go like Palantir, just so you know. But Palantir was the top performer in the S&P 500. So, but we're going to start to cover those next week. And these are aggressive, high risk stocks that you have a piece of in your portfolio. No portfolio would ever have all of these, or like put 100% in one of them. Definitely not. But it's something that is interesting to follow, and we'll start covering that. So have a great weekend, everyone. Thank you. Bye.